Okay, hello, welcome to CryptoQuant's live session on how to use on-chain data for your trading. I'm Carrie and I'll be leading the session today. So if you have any questions during the session, feel free to ask through the chat. We'll try to answer them at the end. So let's begin. Lowering the hurdles of data-driven investment decisions for the investors. This is CryptoQuant's goal. So our goal is to do that. And to do that, we provide digestible on-chain data and its analysis for the public. And this session is actually one of the many ways to help the traders and investors to make informative decisions. So the goals of this session are to first help you guys to acquire background knowledge to understand on-chain data. And hopefully after this, you can actually make investment decisions not based on any other information, but based on data. But for this session, I tried to put as much information as possible. So therefore, some of the descriptions are modified and simplified to help your understanding. So please keep in mind that not all the information is exactly accurate. And most importantly, this session is not an investment advice, nor any suggestion to buy anything. So keep that in mind and let's get to the beginning. So why do we need to look at data in the first place? Well, if you think about buying shoes, phones, cars, or maybe even a pen, you do your research, right? Well, let's say you're thinking about buying iPhone 13. You will probably search its product details, its battery size, display information, camera details. Not only that, you will also watch reviews and maybe compare it with other brands before actually spending your money. Well, what do you do before spending money to invest in cryptocurrency? If you're just following your guts or friends or maybe like an influencer, that's not enough. You need to see the details. You need to know what's going on yourself. And for these investments, people use much more money than just buying a phone. So you should do your research, right? And the research that you should do is looking at the data, because there's so many information out there that's not correct. So you should get accurate information. And today I'm going to say that the accurate information that you should look at is on-chain data. So what's on-chain data? On-chain data is crypto version of insider trading information or financial statement. And it's derived from transaction and trade records on blockchain. All the trade and investment activities that happen on blockchain are recorded and is open to anyone. And we use it, and CryptoQuant uses it, this kind of traits, to make crypto market a place where information asymmetry does not exist. So investors can make rational investment decisions based on data. But you might wonder why you need to use on-chain data specifically when there's maybe other data out there too. Well, if you see this chart on Huobi, this is a chart of Huobi here, the picture. There are some market data that you can use, like the price actions and how people are doing, but that's not enough. That's mostly price information. That can give you technological analysis, but you should get more information on that. And in stock market, there's analysis report, but that's not enough too. It's not real time, it's given quarterly, and there's limited access for this. You need to pay a lot of money or you need to be related to this company. So there's definitely an information asymmetry. But on-chain data solves both of these problems, like the problems from these two. We can actually make fundamental analysis based on-chain data, and it's accessible 24/7. And I told you guys that all the transactions are recorded on blockchain, so it's open. So nobody can actually manipulate it, change the data, so it's always accurate. Also, to do this, we can get this data by labeling the wallets to identify its owner and its purposes. Why labeling the wallets is important is because, first of all, when you see the transactions, it's just random numbers and alphabets if you have seen it before. So if this 0x 17C blah, blah, blah wallet transfer 3,000 Bitcoins to another wallet, that if that's somebody selling the coins, it should change the price, like it should affect the price. So we need to know what this is. But if we have already labeled the wallet, we know what this is. If we have labeled that the first wallet is miner's wallet and the second wallet is, I don't know, the exchange's wallet, we can see that this kind of actions will affect the price in the future. So we label the wallets. And we don't just label all the wallets. There's so many wallets out there, but we label the important ones. So among the many wallets, there are certain wallets that we focus on labeling because it has bigger impact on the price. And the wallets that we focus on are called the main entities. And there are 3 of them. First is exchanges, second is miners, and third is whales. So exchanges is where the price is made. And most of the crypto assets are traded here. And here I'm talking about the centralized exchange. Centralized exchanges are important, and they started to get important since 2017 when people started to trade more on these exchanges instead of trading P2P. So the trades that happen on these exchanges started to affect the coin's price itself after 2017. Therefore, by looking into what is happening in the centralized exchanges, we can see what's going to happen in the future, like the near future, to the price and what the forces are behind the price. So we're tracking exchanges, and we also label miner's wallet because they represent the supply. If you think of the price of gold, how much gold was mined and how much mining companies sell it to the market affect the price. Just like that, how much coins the miners distribute to the market may change the price. So we track them too. And the last one are the whales. Whales are just like investors or traders or institutions. We don't know them. We don't exactly know who they are, but they have a lot of money and they trade a lot. So they make and exploit the market inefficiency by controlling both demand and supply. So they affect the price, so we track them too. So we're tracking mainly these 3 entities. And that was the explanation for the very basic explanation on on-chain data. But you guys are here to see how you can use these data for your trading, right? So I'm going to start doing that right now. The first set of data that I'm going to introduce shows the supply and demand of the market. They are exchange flow data and miner data. Well, there are more data to this than what I'm going to explain to you today, but it's impossible to tell you everything in just 1 hour. So I picked out some of the, the basic ones and the important ones for you guys to learn today. So in 2020, March 12th, do you guys remember there was a huge drop on 2020 March? Well, the price dropped by 52% that day. So that was huge. And many of the hedge funds were closed and legal actions were happening against exchanges because of this drop. Well, but some of us were able to predict this drop was going to happen because we had the data. And the data was exchange inflow. And huge drop. This data is on 2020 March. Data, well, the price dropped by 52% that day. 13 times. That was huge, and many of the hedge funds were closed, March 9th. Legal actions were happening against exchanges because of these drops. 3 days before that, there were huge inflows. Well, but some of us were able to predict this drop was going to happen because we had the data, and the data was exchange info. This helped people and to huge be aware drop. Of this data is on 2020 March data. Well, the price dropped by 52% that day, so 13 times. That was huge, and many of the hedge funds were closed, March 9th. So legal actions were happening against exchanges because of these other flow data to exchange flow data, and it's just basically. Just if you look at the arrows over here, the red ones are going into the exchange. So these transactions going into the exchanges are called exchange inflow data, exchange inflow. And the green arrows are the ones that are going outside, like the coins are being taken from the exchange to outside. That's called exchange outflow. So I'm going to go to the details on the next slides. So I'm going to tell you about exchange reserve data, inflow data, and minor data, and some specific use cases of these metrics. So before there were arrows that were telling you guys like coins are going in and out of the exchange's wallets. So if you combine all the coins that are in the exchange's wallet, all of them, it's called exchange reserve. It's the amount of asset that exists in the exchange's wallet. So how much the wallet has, the exchange has. And it's usually inverse with the price. Well, exchange reserve is the amount of coins that can be sold immediately. For example, if you have Bitcoin in your personal wallet, it's pretty hard to sell it because, well, if you want to sell it, you have to move it to exchange's wallet, right? If you want to sell it at a centralized exchange. So the reserve in the exchanges can be interpreted as the supply volume that's possible to be sold. So in simple supply and price chart, if you think about it, if supply increases, supply decreases, the price increases. But if there's more supply, the price decreases. So it's inverse, right? This is exactly what's happening over here. The blue line is the reserve, meaning the supply, and the black line is the price. So as the reserve drops over there, the price is increasing. And you might be suspicious about this because you don't know what's going on there. So I'm going to show you more. This is the exact same chart from the before, but I just added the green part. It's fund reserve, how much the funds are having, the holding. And the fund reserve increases as the exchange reserve decreases. Like the blue chart is decreasing as the green part is increasing. You see that? So we can indicate that the coins that were in the reserve has flown into the funds, and that may have caused the price to rise. So from this, you can see that the exchange reserve is indeed valid and meaningful to look at. And that was exchange reserve, how much the exchanges were holding. And now I'm going to move to the exchange inflow, the one that I was talking about in the beginning. So exchange inflow is assets that are transferred into the exchange that went into the exchange. If an investor withdraws from the personal wallet and deposits it to exchange's wallet, well, there are many reasons to do that, but one of the reason is to sell them, right? So we can say that, supply that can be sold immediately has increased, so the price will probably go down. We can indicate that. And you can see the green bars on the chart over there, and these are the inflows. The green and the spikes that I have marked with the pink circles. This means that people move their coins to the exchanges and it was larger than before. And right after that, they all dropped. It happened when there was Corona crash on 2020 March. It happened when China banned their mining. And it also happened very recently when the Terra crashed. And all before that, and all that happened along with the exchange inflow spiking. So, but not all the random spikes are important and meaningful. There are some spikes that are more meaningful. And what you want to do is look for the unusual spikes, unusually large spikes, and the beginning of them. So I'll explain more. Well, let's look at March 2020, the example that I used in the front as an example. And we can definitely say that the first spikes are important after this. So 2020, I told you that we had 52% decrease in price, and this is minor to exchange flow. This is filtered inflow, exchanges inflow. This flows happened by the miners. It came from the miners' wallet. We labeled them, right? So these inflows were done by the miners, and in the first 15 hours, the miners were dumping. You see the spikes that are happening. And we know this because we can see the spikes on the miner to exchange inflow chart. And this chart, so we can infer that the first 15 hours of miners putting the coins and maybe selling them caused a 23% drop of the price, 22%. And then after that, this is just exchange inflow all combined, not just for the miners. So after that, this 22% drop led to a panic sell from various investors. And therefore, another 30% dropped. So from this, we know that the first spikes are more important to look at because we want to know before the price drop happens. And from this, we can also say that, we can foresee the price actions, like foresee what's going to happen to the price with these charts. Now moving on to the miners, more specific data for the miners. Well, there's a lot more, but I just brought one for today. So MPI, the miners position index, it shows how much more the miners are selling or holding than usual. So in order to maintain the cost of mining, miners must sell certain amount of assets all the time. So just looking at their sales itself, like the numbers itself, cannot give us any meaningful insights because they're always selling. And the miners provide supply to the market, as I told you guys when I was explaining the entities. You can see when the supply is going to be provided through this chart. And this metric is usually looked at along with another indicator called the Puell multiple. But if you're looking at the supply and demand aspect of the market, this would be enough for today. I'm not going to explain like specifically for today, but this will be enough for you guys if you want to look at the supply part. And now moving on to more specific data. So on-chain data also lets us see the charts and information by cohorts, meaning categories. We can choose which category we want to see, and these are some of the charts to see that. The first two, the UTXO age and value band and SOPR, are more specific. And the last one, profit and loss chart, is like combined and broadened version of this categorization. So first, I'm going to start with UTXO age and value band. Well, before we go on, what's UTXO? Well, it sounds pretty hard. It's unspent transaction output, but if you listen carefully, it's not that hard. So when transactions happen, So dividing the cohorts and categorizing is possible because there's something called UTXO this, and the abbreviation unspent transaction output means that it's the result of a transaction. And UTXO is always unique and up to date with new and correct information because it is destroyed and newly created when each time the transaction happens. So if you see this, the numbers over here, just look at the red box I have marked. The first one is spent transaction output. This is like after the transaction happens, the spent ones are called spent transaction output. The new unspent transaction output is created. So that spent transaction output used to be unspent transaction output. So it's pretty complicated, but it's pretty easy. Like, let's put it this way. If a transaction is made, you destroy the old unspent transaction output and change it to spent transaction output. And you write a new unspent transaction output. And this UTXO has traits of a check and paper money. It works like a check because it contains information on when and how much was moved, like the time, amount, sender, recipient information, all that stuff is written down and it's always up to date. And it's also similar to paper money because you can't just simply randomly split it and say that it's this amount. Like, for example, if you want to pay for 100 yuan, 50 yuan, you can't just rip 100 yuan bill and give it to them. You have to give the whole 100 yuan and receive change, right? And UTXO works like that too. So it's always new. So from this, all you need to remember is that we can get when it was transferred and how much it was transferred, and it's always new. The information is always new. So these three are what you should remember from the slides. If you look at the metrics, then you'll understand. So first, UTXO age and value band. These are the basic charts using the concepts of UTXO. So UTXO age band categorizes the whole coin supply by how long it was held, like when it was last moved. And if it was last moved like a year ago, then it would go to the 1 year age band. And the value band is categorized by the amount of coins it was moved. If you say that somebody bought 10 Bitcoins, then that check would say that, 10 Bitcoin was moved. And we can get the information, so we can put it in the cohort. So each colors represent different age and value of the cohort. And these concepts can be applied to other metrics. So from UTXO age bands, we can see, we can divide the wallets by long-term holders and short-term holders. And for value band, we can detect whale movements from this. And from now on, I'm going to show you the metrics that these two concepts were applied. So first example is a metric chart called realized price. Well, this chart was actually uploaded by our CEO, Kyung, on his Twitter. And this is like the on-chain version of support line. Like for trading, like technical analysis, people use support lines, right? So you can get meaningful support line from this chart. So the color chart over here, it represents the average price of the coins when it was last moved. So for the yellow one, it says 12 months to 18 months. So it means that the yellow line represents the average price of the coins that were 1 year to 18 months old, okay? And since these are called support line, if the price lines that are marked over here are broken, we probably should be aware. And the next example is realized cap, like looking at it by percentage of the age cohort. So from this we can observe the cycle of the market. The cycle of holding and profit taking of long-term holders. Since long-term holders are often considered to be wiser, we can take this into account when we are trading. So each band represents the amount of coins within the same band, just like before. And here we can see the majority of long-term holders, here it says 6 months or plus, are taking profit before the bear market. So if we know this, if we see the long-term holders taking profit, if you see the cycle starting, we can anticipate a bear market coming, right? And the next example is the exchange inflow spent output age band. The name sounds pretty hard, right? It's so long. But if you break it down, it's pretty easy. First of all, exchange inflow is something that I explained in the beginning. So it's exactly what we talked about. It's the same chart. But it says spent output age band. So what's that? So it's the same green line. The purple and pink bars are just exactly the same with the green bars. But it's broken down version of it. So the spent output is something that's written down after the transaction happened. So these transactions already happened. It's just telling me that. And the age band part tells you the transactions are divided by its age cohorts. So if we combine all that together, so different colors or combine that together, we can infer how old the coins were, who sent the coins from this chart. Not just, somebody sent it. No, we can see we can know who, is it long-term holders? Is it short-term holders? We can see that. So I brought another example here. So in 2021, when China banned mining Bitcoins, the price dropped, right? Well, as a whole, like the red square over there, if you look at that, we can see the inflow is very big and there are inflows happening even after the price drop. But what about the old coins? If the old coins are it's wiser, maybe we want to look at that. So after dismissing the coins that were held shortly, I dismissed the coins that were held less than a month for me. We can see that a lot of the inflows disappeared, and most of them happened before the drop, before or just after the drop. So we can detect, if we detect their movements and follow them, the long-term holders movement, we would actually be able to trade better, right? So next chart is spent output age band. So now you're not scared, right? We know what spent output, some transaction that already happened is, we know that. We know what age band is, right? So spent output, but I'm going to explain it anyways. Spent output shows us the asset that moved at that time. And this also can be analyzed with more details by applying age bands. And you can choose to see certain age bands by clicking onto the ones that you don't want to see for the chart. And here, I just left the 7 to 10-year-old coins. And this actually give us price signals. And this cohort actually give us price signals. So if you look over here, when the crypto winter started in 2018, when Corona crash happened, when China miner ban happened, when Terra crash happened, all before that, on the top, we can see that 7 to 10-year-old coins moved. It's amazing. They moved before the drop happened. So when you see them moving, when you see these kind of old and wise coins moving, when you see the spike, even if you think it's going to rise, maybe you should be ready for a drop. So that's how you use this. So and also for whales, also for bands too. When the Terra crash happened, the whales moved, and it can be visualized through value bands. So it's not just age, value also. So the pink ones are like over 1K, 1,000, over 1,000 Bitcoins. They bought 1,000 Bitcoin as a whole, so we can consider them as whales. So this was UTXO, age band, and value band. Now moving on to SOPR, which is spent output ratio. So spent output is something that I have explained a lot before. So it is transaction that happened, and spent output ratio shows the ratio of transactions that made profit and loss. So it's the ratio of profit and loss. And I usually look at the adjusted spent output ratio because it takes out all the transactions that happened in less than an hour. So it's less noise. So less noise is in the ASOPR part. So for this indicator, you see the red line over there, if it's above 1, it indicates that people sold, most of them sold in profit. They made profit. But if it's below 1, it's under 1, it indicates that most people sold with loss. If people were selling even though they were losing, a majority of them were doing that, they were probably bearish. So we can say that, oh, they're losing but still selling, and there's a lot of them, so people are bearish. We can indicate that. We can see how people expect the market to be in the future from this. But for SOPR, this is also, we can also filter the transactions that were done by the long-term holders, whether they made profit or not. So again, long-term holders are usually considered to be wiser than other investors. So if they don't really sell at a loss that much, most of the time they sell at a profit, but if they do sell at a loss, we can expect the bear market to last a little longer, because if they're selling at a loss, then they are expecting a longer bear market, the downhill. And we can also filter the transactions done by short-term holders. And in this case, if short-term holders are selling at a loss, usually the market rebounded. The green circles, if you look at that, if they're selling, a lot of them are selling at a loss, the market rebounded. Well, for long-term holders, if they're selling, bear market is expected to last longer. But for them, it's opposite. If they're selling, probably the market will rebound. It's probably like local market bottom. So how you interpret the chart depends on, who made the sale, like not just whatever sale it is. It depends who sold it. And that was SOPR. It's like this. It's slightly easier version of UTXO age and value band, I think. And supply and loss is it's bigger than that. It's broadened than that. So while SOPR shows the profit or loss of the transaction that happened, supply and loss and profit considers the whole supply, not transactions that actually already happened, but the whole supply itself, not transactions, okay? That's the difference. So we can see how much coins are in the loss zone and in supply in loss. And if it's more than 50%, if more than 50% of the whole supply is losing, it was usually market bottom. And you can see that the percentage of coins in loss is increasing right now over there. After the Terra crash, the percentage of loss is increasing, but yeah, it's still increasing. And for supply and profit, it shows among the whole supply, coin supply, we can see how much coins are in the profit zone in percentage. And if more than 90% of the supply were in profit, it was usually the market top. That's too much coins in profit. And some of them will probably sell, and that will bring the price to go down, right? So market bottom, market top, you can see it from the supply in profit and supply in loss. And the next thing. So this is like the most important thing that I wanted to show you guys today. I love this indicator. So indicators are chart metrics that combine like the concepts and data to detect the market top and bottom. So for this, it's kind of easy to interpret and do the analysis on your own, because we have actually marked the green and red zone for you guys. So I'm going to talk about MVRV ratio today. So MVRV ratio is Bitcoin's version of P&L indicator. So it tells you whether more wallets are in profit or in loss. So it compares the price when it was last moved to the current price. So when it's over 3.7, when it's the line is at 3.7, when it's in the red zone, too many wallets are in profit zone. And when it's under 1, too many are in the loss zone. So you'll probably see that people saying, oh, buy when the MVRV ratio is under 1. You should buy it when the MVRV ratio is 1. That's phenomenal. You should buy it right now. And it's actually under 1 right now, but it's your choice. But we can say that usually when it was under 1 and lower, it was like the bottom, market bottom. And if it's over 3.7, it's market top usually. So this is very easy to look at. You don't have to interpret it on your own. It just says it on the chart. So that's what I like. And if you can't, if it's too much for you, the whole session is too much for you. All you need to remember from this is this chart. Yeah, this is the one you should get. And there are many other indicators, important indicators. I'm not going to talk about it today because it's not important, but it's too much to talk about. So Puel multiple is miners data. And I told you that it's really good to look at with MPI, miners position index, because Puel multiple tells you whether miners are in the profit zone or the loss zone. Yeah. So if they're selling at a loss, if the MP for example, if the MPI is high, meaning the miners are selling more than usual, while Puel multiple is high, it means that they're selling because they're in the profit zone. But if they are selling, the MPI is high, but Puel multiple is low, meaning they are in the loss zone, it's not good. It's probably because they think the bear market is going to last longer. Yeah. So that in that way you can see, interpret the miners' behaviors and movements. So Puel multiple tells you whether the miners are in loss or profit. MPI tells you whether they sold at a loss. Whether they sold more than other average 1 year average. So that was Puel multiple. And NUPL is pretty similar to MVRV ratio. It's almost same. It's similar. It's slightly different, but similar. So it's price data, and NVT ratio and NVT golden cross are both network data. So yeah, these are the indicators that you might do your research later on and take into account when you're trading. So for today, I told you guys, I talked with you guys the supply and demand data. It was exchange flow data, inflow and reserve, and MPI, miner data. And next, I talked about cohort, like data that you can see in cohorts. So you can see specific investors or specific wallets movements from this, whether it's long-term holder or short-term holder or whales wallets. And the last one was the indicator and the most important MVRV ratio. So these are the data that I'm going to talk about today. And I think from this, you can still use it on your trading. And this is pretty accurate because we try to make these data to be institutional grade. So institutions are also using these data, and it's actually all free. You can use it. So what we are providing to lower the hurdles for you guys are market overview. If you think looking at individual charts and data is too hard, difficult, you can just pop in and look at the summary. We already did the summary for you guys. It's very easy to access and it's understandable. It's the overview here, and you can custom your dashboard and select the data that you think it's important and put it in one page to make your own overview. And you can also change and customize the resolution and how the chart looks like on Pro Chart, both on basic chart and Pro Chart. For Pro Charts, you can do it more specifically. And we also provide exclusive analysis done by our analysts on our data. So it's data-based analysis is done on our homepage. So if you want to take a look over there, you can come and click on Quick Take. And we also provide alerts. You can set real-time alerts for 24/7 market. You see, the cryptocurrency is pretty hard to trade because the market is always open 24/7. That's stressful, right? And I told you that for data like exchange inflow, you need to see it when it first happens, when the spike first happens. But it's pretty hard to open the chart all day long and look into it until the spike happens, right? So what I do, I set the alert, and so the alert tells me when the spike happens. It sends you the alert through emails and Telegram and all that. So you can send it, or you can actually, if setting your own alert is too much, you can just follow our Telegram. We have alert Telegram for you guys. Yeah. So that's what we are working on to make sure that you guys are making your investment decisions based on data, not just FUDs or like somebody's opinion, anything like that. What we want to tell you guys is that you guys should make your own decisions based on your own analysis, because that's safe, and that's what you should do when you're spending a lot of money, right? So that was it for today, and thank you for participating. And maybe we can have some questions. If you have any questions, please ask me. I will answer them today, like this time. If you want to listen to the explanations or look at the PPT again, you can ask me that too. Yep. Okay, so I see that no one's actually asking questions right now. So maybe I think we're good for today, and thank you for participating. We really want you guys to make your own decisions on investing because it's a lot of money. Yeah. Thank you guys today for participating. It was long, but I hope you guys make your own data decision after this session. Thank you. I was Carrie and CryptoQuant.